So we have very bustling primary market offerings also right now. Capital Small Finance Bank is in focus. We have Mr. Sarvjit Singh Samra, MD and CEO, and Munish Jain, Executive Director and CFO of Capital Small Finance Bank, joining us right here in the studios. Gentlemen, afternoon. Thank you so much for joining in. That on the point earlier which you just made, just to scratch it further, how is Capital Small Finance Bank different in business model versus all the other, some of the recent small finance bank got listed?
The thing is, we converted from a banking entity to a banking entity. Before starting as India's first small finance bank, which we started operations on April 24, 2016, we were a local area bank for 16 years. Local area bank operating in the state of Punjab out of 3 districts, which was originally allocated to us as area of operation. And in 2015, growing to 5 districts, as the regulator granted us 2 more districts, added 2 more districts to our area of operation. And then with now starting and converting from local area bank to small finance bank, which has given us enough, which has opened up wide spectrum of opportunities for growth for us. We were 47 branches based out of those 5 districts where we were operating as local area bank, and today we are 173 branches, out of which are in 5 northern states along with the Union Territory of Chandigarh.
So which is your which are the states which have maximum amount of branches? Are you a more Punjab play?
Actually, at present, the more branches are in Punjab, but as I mentioned earlier, originally we were in only 5 districts, and total Punjab has 22 districts. So after our conversion, it was meaningful for us to spread all over Punjab. But along with that, after our conversion, we started expansion to Haryana and few other states as well. So now Punjab we have deepened, and we have covered our entire Punjab, and Haryana, which we presently call is the process of making our next Punjab. And of course, then we'll start, and this will start to Rajasthan, where already we have started opening branches. We have branches in Delhi, Himachal, and we are there in Union Territory of Chandigarh and all around it.
Sure.
And another thing, as you said, the differentiation, another thing which the main differentiation other ways, we are very granular on both sides of the balance sheet, whether we talk of assets or liabilities. We are almost 100% secured book with 0 direct microfinance exposure. So our target segment is middle income group, which we define income levels from 4 lakhs to 40 lakhs. And our key focus is that, and we want this segment to, we want to become primary banker of this segment. And another thing that I want to share with you very happily, that we maintain very high CASA, and that is also a CASA in the true sense, where we are paying only 3.5% of savings bank. And this is again this USP has been developed because we are into this liability business for last 24 years.
Sure.
Yeah.
Sure. No, let me just bring Munish also into the conversation. So since we're talking about how deposits is very strong and CASA is strong, can you talk to me about what has been the growth rate of deposits? And in terms of the loan side of things as well, are you largely agricultural loan oriented, or which are the other products which is driving growth?
If we talk about the asset side first, if we talk about the asset side, we are typically a secured lender. We are lender to be active for the middle income group segment. Our typical lending franchise, or I can say 85% of the lending franchise, constituting the 3 products that we called MSME, mortgage, and agri. The perspective is we want to be the primary banker of the customer. Within this, if we look into the subsets, so agriculture constituting around 38 to 39% of the book, mortgage constituting 26% of the book, MSME constituting around 20% of the book. The key important point is our average ticket size of the saving liability business, our asset business, is 1.3 million. And we are here in a pure secure lending play, or rather I will add it. Out of the 99.8% secured, we have more than 84% of the book in which is collateralized by immovable property. The perspective is we are in a real term secured lender, and being our history as a local area bank, being our history which make us have a 24 years of the learning as a lender, we're able to maintain a very good quality of the book also.
Okay, so let's talk about that. Mr. Sarvjit, how's your asset quality right now, and do you see pressure on that? Also, is your business or loan book also sensitive to the vagaries in the agri side?
The thing is in, if I talk about the asset quality, the asset quality you would appreciate, we are comparable with one of the best banks in the country, and which we have been which we have able to maintain over the years. And another two very important points I share with you, that there are almost zero write-off and no NPA sell-off. So the cleansing of balance sheet has never happened.
Okay.
So this is all the data, all that is there, and that is there on the document and on the public domain. This data is all recovery based. We think since we are a secured lender, so anything we lend, it is recoverable, and we don't write off and we recover it. Of course, it takes some time. It takes
All right,
time.
Mr. Sarvjit Singh and Munish, thank you very much for dropping by in our studios, and good luck for your IPO.
Thank you.